Okay. So first and foremost, I would like to say thank you to you guys for spending the time with me. Precious time. Time is always precious. Today is the 15th of June already, 2020. So today's topic, we're just going to go into intraday trades. How do you actually make decisions of trading that particular pair straight away? And how do you actually trade intraday? Intraday meaning that you will make trades that you don't need to keep it very long or above 1 day to keep it on and on. You just can trade and then maybe a couple of hours or within the same day close it, so that you close it in profit or loss in within a day. That is basically called intraday trades. But to make intraday trades, we are usually using big time frame like 4 hour and daily to confirm the trend and to confirm the movement, to confirm the day, the price action. Okay, so it is important for you to know that um, if you are looking at short-term trade, it doesn't mean if you go on to long-term time frame you are trading long-term. No, you are looking at long-term time frame to get the idea, to confirm the trend, because you need big data, bigger data, more accurate data from long-term, what do you call that, longer term time frames, in order for you to have clearer information and clearer decision making value. Okay, so now for example, let's just take a look at Euro USD. But the reason why I'm taking a look at Euro USD may not be the main way of choosing a pair, because I'm just using Euro USD for now as a demonstration first. But I will tell you as well what's my first step. My first steps, usually if I want to trade, is never to look into your MT4, your MT5 straight away. Okay, the most important thing is that if you go on to, let's say you have your own way of finding information, whether it's news, you hear the radio, you watch TV, you watch Bloomberg, if that is your way, you can use that way, as long as it is not inside the platform as your first step. If your first step to actually trade goes straight into the platform, it's actually very, very risky. Okay, so for example, here I am using a platform like this, but don't worry, you don't need to get a platform like this, because I will be sharing with you all the information and all the research that I do every day. So here, for example, as what I have seen today's news, it's got a lot of a risk element, meaning that they are mostly worried about the second wave of the coronavirus. So that was sort of the first type worry or anxiety or fear that has actually come out into the market from news, from radio, from Bloomberg, CNBC, and all that. They have actually been talking about this. So now, just about a couple of minutes ago, I watched the Bloomberg or CNBC, if I'm not mistaken, and they talked about a rising case in Beijing. Okay, so now all these things, a lot of people may find it a little bit difficult to understand. How do you actually listen to the news like that, and what do you actually trade? Now, it is a very easy formula to actually know what you need to actually do, or what kind of instruments are actually better to trade, depending on the type of news that you listen to. If the type of news that you listen to is giving a lot of people a lot of fear, for example, like the coronavirus, is giving people a lot of fear, for example, whether or not the schools and work and everything will get jammed up, will be closed down, more lockdown, and people will feel very depressed at home, like how it was, because we all have actually gone through the COVID-19, and majority of people have actually struggled and suffered as well. So when we think about the COVID-19 again, and also investors and traders will also have similar type emotions, and that emotion is more like fearful type emotion. So you guys understand that I've talked about three types of emotions in the market. You have greed when the market goes up, when people are feeling quite confident. Like for example, just a couple of weeks ago, not a couple of weeks ago, sorry, a couple of days ago, almost about a week ago, when schools and work start to actually have, I would say, they got opened a little bit more, and then people can actually move around freely, people start feeling free again and started to go back to normal life again. And this feeling basically will make them feel more confident, and hence the reason you got a lot of instruments, certain instruments are going up, for example, and people are buying them. For example, like in the US a couple of days ago, a week ago, was very different from now. Now the US dollar is dropping. Why? Because there are cases of COVID-19 increasing, and the second wave is coming in, and it's been announced in the news. So this will make people sell the US dollar because they are acting out of fear, right? So when they are acting out of fear, when the majority of people are acting out of fear, they will sell that currency. They will sell the US dollar there, in, because it involves the US economy. It involves a lot of uncertainty and fear and everything else. So the US dollar start dropping. When the US dollar start dropping, when there is a fear, like for example the COVID-19, this is called the risk off environment. Okay, so the risk off environment is what I need to actually make you understand, so that you and me and a lot of other traders out there can actually pick the right pair to actually trade. So first we need to pick the right pair, not to click on the buy and sell. Once we pick the right pair, we are able to buy and sell clearly, because the trend is clear, or we can actually buy and sell a little bit more appropriately, with lower risk and higher probability. Okay, so now as I speak right now, it is still a risk off environment. Risk off environment means that they want to turn off the level of risk in within them. Okay, so if they are more fearful, it's called a risk off environment. If it is a risk off environment, they don't want to actually how do you call that, buy and buy. They want to actually sell what they think will not have a high value later on. So they usually buy safe havens, and they get rid of US dollar, they get rid of other currencies, but they start buying safe haven. In the time of COVID-19 and virus, like the coronavirus situation now, and when you hear there's a lot of fear, and then the cases is coming up in certain countries and all that, in the US or in Beijing itself, in China, then you know that the fear is coming in. If the fear is coming in, you need to think about safe haven currencies, because when things like this happen, people start buying safe havens like the Japanese yen, like the CHF, like gold as well, because then you will see that if all this is coming up, let's say more people are buying JPY, more people are buying the Swiss franc, CHF, and also more people are buying gold, then it confirms that there is a risk off environment. People are trying to turn off their risk level and become more careful. Okay, so here, for example, in actionforex.com, you can actually see a table like this, and this table is called the top movers. Okay, so if I click it again, just to refresh it a little bit, you could see that the top 10 movers is just giving us a bit of an idea. What are the top 10 movers? That means where are the big boys and majority of traders, they are putting their money into which currency pair. Okay, so the top 10 movers are usually the top 10 currency pairs that are moved by investors and traders' money. The money is going into into these pairs. So these pairs are actually at the top in terms of trading volume, in terms of activities, in terms of busyness in the market, volatility, and a lot of other things as well. Okay, so it's a mixture of things. But then let's look at from number 1 to number 10. You can actually see that from 1 to 10, a lot of pairs, I mean, they are more focused into the AUD, correct? So we've got AUD here, we've got AUD here. So how many times from 1 to 10 we have actually seen AUD appearing and appearing? That means AUD crosses. Why are the traders focusing on AUD? Mainly because of many reasons. Could be the banks are also trading it, could be political, geopolitical, or even economic reasons that moves the currency, so that a lot of the big institutional type traders are actually going into this pair. So these are the pairs that we ourselves need to first check in order for us to trade or not trade it. But first step is for you to look at what the other bigger boys are paying attention to, and then we look at that currency first, and then we start to go onto the chart, and then we start to look at the trend, and then we do the technical analysis, and then we decide to click the buy or the sell. So now you see how early we are from actually just clicking the buy and sell button. So majority of traders, they wake up in the morning, they want to trade, they open up their computer, their laptop, or even on their phone, and they log in into the MT5, MT4 platform, whether it's mobile platform or your desktop, and they go straight onto the charts and start drawing lines and setups and all that. And that is not really, it's not that it's bad, but it's just that it lacks your step-by-step approach. And what will happen then if you jump out of bed and go straight into MT4 or MT5 platform, you're actually cutting all the relevant risk rules, you know. So what that actually means is that you are becoming more a gambler in terms of gambling the market if you jump straight into technical analysis, because technical analysis alone cannot actually give you enough data. And what happens is that sometimes we cut short, or we use a shortcut in terms of all the steps that we need to take. So it is very important, firstly, for us to get a bit of understanding of what the other traders are doing, especially the bigger boys. What the bigger boys are trading, usually, if the trend is clear, then we are in a better position to find low risk and high probability trade ideas. So now, for example, here, if for example, today, because of the coronavirus, a lot of focus are into the Australian dollar for some reason. We don't know why, but this is where the money is going into. This is where the volatility goes into AUD. As you can see, this is a free tool on actionforex.com. But whether or not it is really where the investors are putting their money in or not, we don't know that yet until we ourselves confirm the trend and confirm a lot of other things on your chart later on. So now, for example, we have to just be sure that we know what we are looking at. We are looking at what currency appears the most here. Now we can actually see that on the 4-hour chart, we can see it is still the Australian dollar, Australian dollar, Australian dollar, because we have got 1, 2 here, 3 here, 4 here, 5, and then 6. 6 out of 10 has got an Australian dollar in it. So AUD crosses are traded quite a lot on the 4-hour chart. What about, let me check. Now, that was on the daily chart, sorry, if I'm not mistaken. Yes, on the daily chart itself, we have got a lot of focus on the Australian dollar. On the 4-hour chart, we probably have got a bit more focus on the euro as well for the 4-hour chart. Now, 4-hour chart and daily chart, they're quite different, right? So 4-hour chart mainly means that each one candlestick move for 4 hours, and then the next one appears after 4 hours. The daily chart's the same. We've got daily. 4 hours, sometimes it takes anywhere between 1 day to 2 days or even 3 days for your take profit to actually reach. But daily chart, if you do your analysis on a daily chart, then it might take a little bit longer. Sometime 1 week, depends on the market, could actually even stretch above 1 week as well. Sometimes even a month, but it is very difficult to just pinpoint a particular time frame for each one time frame, how long it takes to reach your TP. Okay, it's the same as well with the 30 minutes, the 1 hour, you know, the 15 minutes. Everything has got a sort of a rough idea how long it takes, but it's always never 100%. Okay, so it all depends on the market, how much movement, volatility in the market in the market is. So now, for example, if I look at the daily chart, I like to look at the daily chart as well. Now, it doesn't mean that if I look at the daily chart, I only trade long term. No, I'm looking at the daily chart, I'm looking at the 4-hour chart at the very beginning to gain clearer data. Okay, the data is very important. I'm not making any analysis at this moment of time. There is no analysis when you choose the right pair to trade. When you choose the right pair to trade, you are looking at the trend, you're looking at the top movers, you're looking at a lot of little ingredients that I will show you. Okay, so here, for example, when I go into the 4 hour itself, I can see that the first thing I can do is look at the time frame here and look at four dots at least. If there are four dots, that means a trend is quite strong for that pair, but we don't know yet whether it's an uptrend or a downtrend. Okay, so here, for example, on AUD we can see that there's a number here. It says plus means they're buying the AUD and they're selling the JPY. But I'll never use any of these hints to actually buy or sell. I will use my own eyes, trust myself to draw the patterns and things like that onto the chart later on after I am sure of what I have picked. So your first step has to always be picking the right pair first. So it doesn't mean that if you love Euro USD, you love GBP USD, and you only trade that for the whole year, that would actually be, it's not wrong to do that, but the forex market has got too much opportunity. It's got too much opportunity with so many extended number of pairs, 50 plus pairs to trade. So why would we want to actually limit ourselves to just pick one pair? Now, the problem with picking one pair only and you love it so much that you don't trade anything else is that there is a very high risk of you getting stuck with that pair, and maybe sometimes you enter that pair and you have to wait for very long, floating and all that, and you don't want to go to any other pairs, then it might not give you the best returns in the market. If you stick with one pair, it's far too risky, because we are supposed to trade what the big boys are trading. We are not supposed to trade what we like to trade, because the reason is in forex, the market is moved by the big boys. So the big boys are making the trend. They are also taking money from you, meaning that they can actually wipe you out if they want to change the trend anytime. So it all depends on the big boys. So if the big boys are creating a trend and they are entering a particular currency, then we want to take a look at that using our skills and our tools in order for us to understand the technicality of it, how you want to trade it. Because even if the banks are choosing AUD JPY, it doesn't mean that they will actually trade now. They may actually be trading now, but then they may be opening their trades for 1 year, for 6 months, for 1.5 years. We don't know, right? So because they are building the trend, they usually trade on a very long term. Okay, so this is this here we are looking at AUD JPY. So I like AUD JPY in a way, mainly because we have the four dots here. But also, when as I was reading today and look into the market and do my own analysis and my own readings and all that, I find that majority of traders are definitely getting interested in buying the Australian dollar crosses. Okay, but what's happening exactly to AUD JPY? Let's take a look together. Okay, so here, for example, after I've actually picked a pair, but of course you don't need to worry about it too much, because I will be picking the pair in advance for you guys at the very beginning, and then as we go, I will teach you how I do it, and as you get to know how I do it, you can do it yourself as well. But at this moment of time, we'll just follow flow and try to get opportunities and see whether we can do trade setups as well. So let's just get into it. This is GBP AUD, but I would like the AUD JPY to look at that first. So here, for example, before you guys start, it's good for you to insert the indicator. Now, I only use the moving averages here. Ignore the red line and the yellow line, but just go for the blue lines, which are made of the 50 exponential moving average, the 100 exponential moving average, and the 200 exponential moving average. So in order for you to insert these lines, all you need to do is go to insert, and then you go indicators right there, and then you see trend, and then you click on to moving average. Okay, so the first number that you put in period in the period section here is 50. Okay, so 50 is your first one. You just change the method to exponential. Make sure it's always on exponential here, and apply to close. You don't need to change anything else. You can always pick the color that you want, it's no problems, and also the thickness of the line that you want as well. All right, so you start off with 50, you click on OK, and then you re-click it again, the moving average trend indicator, and then you put 100 right there. You leave exponential, you leave close, you can change the color if you want, you click OK. Then the third time you have to put in 200 here, you leave the rest as well, change the color if you want, and then you click OK. Then you will get 3 lines as it is here. Okay, so the 3 lines right here is the 50, the 100, and the 200. Ignore the blue and red as I've mentioned. So once you have the 3 lines right here, you can look at 2 things. You look at the candles, which is the current price here, maybe this whole trend right here, or the cluster of candles. Are they under all the 3 lines, above all the 3 lines, or trading in between the 3 lines? Okay, everything has meaning. Everything will tell us a little bit more about the trend. So the second thing to watch as well is to look at how the 3 lines are moving. Okay, are they moving sideways? Are they actually moving up? Are the 3 lines going up? Are the 3 lines going down? Or the 3 lines going sideways? Now here, the line on the 4-hour chart, the 3 lines, the 3 blue lines are actually pointing sideways, and that means that the trend is not very clear. And also, the candles are trading not above all the line or under all the line, but in between. If it is in between, it actually means that, again, the trend is not clear. So there is no clear trend on the 4-hour chart. We need to look at 3 time frames: 1 hour, 4 hour, and daily. If all 3 tells you the same thing, that it is an uptrend or a downtrend, let's say 1 hour says downtrend, 4-hour downtrend, daily downtrend, then it means that the trend strength is very high. It's very strong trend. Okay, so whether it's downtrend trend or uptrend trend. Okay, so there we go. So now, for example, if I look at the 1-hour chart, I can see that even if I zoom out a little bit, I've got all these downward type movement, and this downward type movement is under all the 3 lines on the 1-hour chart. So I can say that the bias is more to the downside, but whether or not it's very clear downside, it's not clear yet. Okay, because we need to compare 1 hour with 4-hour, 4-hour with daily as well. So now on the 4-hour chart, I don't see the same thing. I see that it went up all the way, and then now it's in the middle of all 3 lines. So the 1 hour and the 4-hour tells different things. That actually means it's not a good sign of trend. Trend is not very clear. And then I got the daily chart. Now, when I go to the daily chart, it's something totally different. I have got the 3 lines still like pointing sideways. I need the 3 lines to go up like this, all the way up or all the way down. Then it gives you the trend. If the 3 lines are pointing up, all the 3 lines pointing up towards the sky, and then all the candles are above the 3 lines, that is a very clear indication of an uptrend. Okay, that is if you see it on a 1 time frame. But then if you see the same thing on a 1 hour, 4-hour, and daily, then it's better for you to pick this pair to go further into analysis, because the trend is quite strong. The trend is quite clear as well, clarity of trend. Okay, so now here with the AUD even though I picked it because I've seen that there are 4 dots in the action forex, and it shows like there is clarity of trend, but it is not for now. Now, because I confirm with my own eyes and I look at the 3 time frames, it does not match with the trend, and it won't be a pair that I would like to pick at this moment of time. Okay, so for example, let's say you guys like Euro USD. Let's see whether you get the same thing in the Euro USD or not. Okay, so here, for example, in the Euro USD, we see the current candles, it went inside within the 3 lines. Again, it's not very clear on a 4-hour chart, so the trend is not clear on a 4-hour chart. But then when we go on to the 1-hour chart, we've got a little bit of a downtrend, but look at these 3 lines. The two lines, the 50 and the 100, maybe they are pointing downwards, but not the third line, the 200 moving average, exponential moving average. It looks like some uncertainty going on at the moment. So my criteria for me to be successful in trading, and I have witnessed that myself, is I only trade when three time frames are actually very clear in the trend. Now, it doesn't mean that you cannot trade at all when they are not matching on all three. If they are matching on two, you can still trade. If they just it's just clear on one time frame, you can still trade. It's just that your risk level may be a bit high. Doesn't mean that you cannot make money. You can actually make money as well. But it's just that if you are entering into a clear trend, when you've compared 1 hour, 4 hour, and daily to be similar and to be clear, then your probability of success is much higher. And that also means that you can actually open up a bigger trade, and your bigger trade will give you bigger returns as well. Okay, so that's for Euro USD. Not very clear. If I go into the daily chart as well, I can see that the 1 hour, the 4 hour, and the daily just doesn't actually match. Okay, so where do we it's sometimes like that where you don't find really good pairs. Okay, but let's say we looked at something now. Let's say we want to stick with Euro USD, and we want to see whether we can trade like now, whether or not there are time frames that we can actually trade. So you can actually look at lower time frame. I usually start at the 15 minutes chart onwards if I want to see something and just want to trade something right now. Now here, for example, it's just not clear, the trend section on the 15 minutes. If I go on the 30 minutes, you can say that it's actually to the downside. The three lines are open. They need to be open like this, pointing down or up. Okay, so up like this, three lines up, and all the candles are above, that means very strong uptrend. If it's down and all the candles are under all the three lines as well, that means it's strong downtrend. Okay, so here, for example, what do we actually see? You see, if I show you 30 minutes on the Euro USD, remember we talked about ABCD going down, ABCD going up. Now here we have got A here, B here, C here, D. Okay, oops. It shows like it is actually going okay, let me just make sure we clear out the charts. Oops. Okay, so here, for example, if I were to zoom out, we already have ABCD wave going up, but then now for this moment onwards, it is actually following ABCD going downwards, and we can see there's A here, B here, C here, D coming down, and all that. Now, when we make the ABCD evaluation, just so that it follows the trend, no, just so that we can follow the trend, and we don't really need AB equals CD and all that. No, we just want to see some very random and unorganized ABCD going down, so we know the trend. Now, here, for example, we have a lot of zigzag going down, and then more zigzag going down here. This could be A here, B here, C here, D, and stuff like that. But now what's happening now is a little bit of pickup as well. Why? Because this is A here, B here, C here. Maybe we need more downward move, maybe under this one here. Then we know whether or not it's got to go down much more. But as you can see now, it is looking like it's picking up. It's a reversing. Okay. On the 1 hour chart, it looks like you have got more chance to see a bit more clarity right there. But when I talk about clarity, it doesn't really look very, very clear because it's a little bit difficult at the moment to see the trend. I mean, of course, today is Monday, you know, things are still marinating. We have got a lot of GDP type figures as well, economic data to actually expect from tomorrow onwards until Friday. So that's why we have got a lot more to wait and see first for tomorrow, because today we didn't have much data as well. Okay, so that's why most of the time I don't trade on Mondays because I wait until the price actually marinate and give me much more pips for the next day. excuse me. Now we have got, let's say, I just want to demonstrate some clarity. If we have clarity, if the market does not give you clarity of trend, we just simply cannot find clarity and we don't actually trade, because it will just give you more troubles and more risk if you actually trade when it's not clear. Now, clear for me meaning that the candles needs to be under all the three lines, or above all three lines. As you can see, when you see candles are trading in between all the three lines and the three lines are pointing sideways, it's just giving you the indication that the market is not giving you any clear trends at the moment. So what traders usually do is that, because let's say if last week they didn't trade and they get really itchy, now they itch because they didn't trade last week or 2 weeks or a month, let's say, and they really want to trade. So what they do is they force themselves into the market and they try to look for clarity of trend. When the market is not giving you a clear trend, you cannot go and find it or force the market to give you something. Then what will happen is that you will go into floating, and then it's going to be very, very difficult. Okay, so here again, very easy. It's not really giving me a lot of clarity, so I don't really want to pay a lot of attention to a chart that is not very clear. But this is also quite common in the world of forex, especially on a Monday. Things just want to marinate better. In another couple of days, maybe by tomorrow, Wednesday, middle of the week, then things start picking up again. And you can still trade, but maybe on lower time frames as well. But at this moment of time, I'm just seeing a lot of unclarity, non-clarity of trend. Okay, I think I'm missing one line here. I think that the 50, this is the 50, I think the 100. Okay, let me just trend and moving average and 100 right here. This is how you insert the indicator. Make sure it's exponential on a close, and then I change the line here to this one here. Okay, with the line slightly thicker. Then I've got a third line. So now I have a third line. What is telling me for the US oil on a 5 minutes chart is that it's trending lower. Why? Firstly, you got ABCD going down. You've got all these candles here, current price under all the three lines. The three lines movement, I don't like it so much, but I like it better on the 15 minutes chart. On the 15 minutes chart, the downtrend is clearer. Why? Got all this zigzag going down, and you got these three lines beginning to go downwards as well. And then you have got all the candles under all three lines. But let's see what's happening with oil on the 30 minutes chart. Now, this is how a clear trend looks like. Okay, now if I've got a clear trend, then I can see a setup. I can teach you and share with you ABCD patterns or setups and all that, because the trend is really clear. So I've got, okay, I want to also insert another line. I usually insert the 8th and the 20 exponential moving average as well, just as an extra line with extra strategies, which I will share with you at a later stage. Okay, so here, for example, it is showing me that the current candles are under all the three lines. If I match that with a 1 hour chart, I still see that downward type movement, but then the three lines, the 50, the 100 and the 200, they start to touch each other. If they start to touch each other and get entangled to one another, then it might also signal a little bit of change of direction by the market or the traders as well. Okay, so we do have all the candles under all the three lines. What about the 4 hour? Now, 4 hour things start changing for the oil. Okay, so that's medium term. But let's see, we take on the short term. Let's say we are looking at the 15 minute chart, and then we go onto the 30-minute chart. From the 15 and the 30-minute chart, I think the 1 hour has begun to change a little bit with the three lines. So let's say if I'm looking at the 30-minute chart for oil, we're talking about the oil, okay? So now with oil, if I look at 30-minute chart and I zoom in, I want to look at whether or not I have an opportunity to sell now, or is it actually getting stronger at the moment? A lot of things can actually be seen on your chart itself. But at this moment of time, it does show A here, B here, C here, and then D going downwards. And as I zoom out, for example, I see a lot of A, B, C, D going downwards as well. Now, one of the things is that you need to quickly ask a question to yourself. If, for example, you want to sell the market, now why you want to sell? Because it is on a ABCD going downwards, and you see that the market is falling, and you can see that there are a lot of bearish candle going downwards. Now, as it comes downwards, let's say, I want to ask you guys a very, very important question. What exactly you need to think of when you see that you can actually trade this? May be a sell, because Kenny says that the oil is on a downtrend, so you want to sell. Okay, now you're thinking of selling, and I'm thinking of selling as well, because the market is bearish at the moment. This is a bearish market. Steps going down, waves are going downwards, and most importantly, the current candles are under all three lines. Okay, because they are under all three lines, that gives me a better confirmation that it's better to sell oil, not buy oil. This is a selling type market. But because it's a selling type market, your question should be, if I am selling and I want it to come down, where can it go up? Where would it be possible to go up? All you need to do is look to the left. You see, if you look to the left, you can see you have support here, you have support here. This is where market has gone up before, okay? And also around this area and this area. But as it goes down, the most obvious place is here, okay? There you go. All right. So now it is going downwards, but to find the right timing, right location to enter to sell, I have to wait until it crosses the blue line, comes under my support, then gives me more chance to go down. If not, you know what happens? It might come down and reverse around this. That is why it's very important for us to look to the left. So far clear? You guys are clear? Yeah. And once you've got the trend right here, you can also draw the pattern. So I can start from here, or start from here, for example, A to B right here. Okay. So I've got a purple line, A to B. Now I'll draw the B to C. We are always looking at wick to wick, not the body. Flat body part is the wick. Okay, so that's a wick right here, right? So I have A here, I have B here, and I have C. How do I use the geometric ABCD pattern to find how far can it actually go? Very easy. You will take that, double click all this line, and you can move the center dot, and you move it here. That means it's starting from C all the way down to D. Okay, so this is where you can sell and take profit at this area. So if I were to take that and go in there, this is just an ABCD type pattern. Now, in order for me to understand better where should I actually enter and exit, then you want to convert this simple ABCD pattern into a geometric pattern. Now, it is converted into a geometric pattern only after you have put a line from A all the way down, all the way down to D right here. Okay, so now as I do the line, I have got a cross area, cross section area, okay, and you want to mark that one there. Now, because you are selling, you want to also sell under the blue line. Now, for example, you can see that it has actually gone down here, but then it's starting to reverse. As it goes up and above 3508 and above, it might want to find momentum to the upside. But now, for example, you are looking at here as a potential for the selling the take profit to actually be taken here, but then your selling will actually start at a 3508 area. Of course, we want to adjust this price using psychological numbers as well and all that, but then from the current price right down to the D point area, it's already about 150 pips. Of course, you need to minus psychological numbers, minus this, minus that. Maybe you'll get about 100 pips or so. 100 pips after analysis is much better than just going into the market thinking that it is a, downward trend, or just not actually go through certain rules. Now, there are rules when it comes to trading geometric style as well. So now here, for example, you have got the potential for price to fall from there right down to there. So you need to pick, for example, because it is at 34.86, 86 as it comes down, it will go to 80, 35.80. Now, 35.80 is a psychological level where it might come down and then bounce up from that level. So I want price to come lower under 35.00. Not 80, sorry, 35.08. Now 35.08 or 09 goes down, you will get 35.00, not 80. Sorry, it was my mistake. 35.00 is a psychological number, but then you also have 35 35 or 34.90. You could have sold there, but now because it is only at 34.78, 34.70 is another level that you can actually sell. 34.70, I'll put it as a red line and we can watch it ourselves. So 35.40 will be my selling area that I prefer. So I'll change that into, let's say, yellow, the area that I wish to trade. So if I've got 34.70 is an ideal selling. You can actually sell there. So 34.70. And then you want to take profit at about 33.30, let's say. Yeah. So there, 33.30. I'll teach you more on how you adjust the psychological level, so don't worry. 33. That's 34. Then I've got your 33.30. Yeah, 33.30. So this is basically US oil, let's say, just demonstrating on what the market is giving and how I can actually trade it. Is you have got 34 and then you got 33.30. Okay, so you do have price differences there. That actually means that you can actually sell at that yellow line, under that yellow line at 33.90 is better, and then 33.30, sorry, is your take profit. So this is the oil. So let's look at how oil would actually progress, but I will leave that drawing right there and we will see what happens to that yellow line, two yellow lines that I put there. Okay, I probably will execute a trade on oil as well. Since we see that and the market is showing you that, what about you guys giving me voluntarily a pair to analyze, and then we will analyze it straight away. Give me a second, guys. I'm just going to switch on the air conditioning on the other side. Give me a second. All right. So I'm back. Yes. Have you guys got any suggestions of? Nobody answered. Any suggestions of any pair you guys are looking at, so that we can analyze it together? What are the pairs that you are looking at? Just so that we get an idea, and then I can tell you from what you actually chosen whether or not there is a trend or there's no trend. Gold, yes, good idea. CHF, you guys been listening, that's good. Of the currencies that are safe haven ones, CHF, JPY, gold, brilliant. Okay, so let's look at CHF, JPY, let's see, okay? CHF, JPY, there we go. Okay, so I'm just going to put my templates on. Oh, okay. All right, so CHF JPY. Now let's look at how the candles are moving, the trends, and also the three lines. Now here, for example, just looking at the 1 hour chart itself, we have got ABCD going down until at this area, but then ABCD start to move upwards. Now, this is on the 1 hour chart. But as the market moves upwards, I looked at this area here, and I can see that we have an upward move. There's like candles moving upwards, very long bullish candles on the 1 hour chart. But then I see that the price has actually sort of stuck at this area where the 100 exponential moving average is. But most importantly is at a cross. This is like a doji type candle, okay? So when you have got a candle like this, as it goes up and then you have like a cross there, it tells you that no, we don't want to go up. Okay, this is what it means. When there is a cross, it tells you that the initial trend may not be able to go up a lot more because you have the dodgy candle right there. So this is why it's reversing now, and it found a resistant area right there, and it also found a resistant area very close to the 113 20 and 11300 psychological number. But as it goes up and then the wick is up here, I'm curious to know the price of the wick. Now, the price of the wick itself is at 113.24. So it is definitely a price where it could reverse because it's very close to the 20 psychological level. So now we've got a bullish candle going up, and then we've got like a cross, and then it's got a bearish candle coming down. So here itself is giving me a hint that it will continue most probably to go down much more. Okay, but where do I actually sell? I don't sell it now. I will sell until a second candle comes out. Bearish candle comes out, then I would actually sell. But the problem is that as it comes downwards, okay, let me see whether I can draw a little bit. Okay, so here, for example, this area here is a resistance right here. Now you need to look to the left, okay? Look to the left, to the left, to the left. Now, as you are looking to the left, you can see that this is resistant area. Let me just clear it. Give me a second. Undo, undo. Let's say this is a resistant area, okay? And this resistant area, if you go towards the left, all the way left, you can see that you have some support area, okay? And you have some bearish candle coming down. here as it goes up got stuck there and it's on its way down. Okay, now if it does come down with a bearish candle more, it might actually mirror a very strong bearish candle like this one here. This is a very strong bearish candle. So what that means is that whatever that comes downwards, okay, like this, might actually follow the length of this bearish single candle, which actually means that if it comes down, it may come down to this level, because this is where the bearishness actually stopped, the end of the candle. So yes, it might come down from 113, and then at the 11278 area, it might actually stop. Okay, so because it follows certain candles, especially the bearish type candle, and then it might then go up again, and find support around this area. Okay, so this is for me through experience. It have a chance to actually come down and find support either here, or come down a bit more and find support around here. So what does that mean? That actually means that on a 1 hour chart, for you to sell it completely may not be a good idea, because it might actually correct, go up first, or maybe it start to play around this zone, between this zone and this zone. Okay, so this is roughly what might happen. How do we know whether it really will happen? Well, until we see what happens in the next 1 hour or 2 hours or so. But let us try to analyze a little bit more. Wait 1 second. I'll just undo all these ones here. I think we can, yeah. Okay, so if I go into the 4 hour chart, I can see that it's got a little bit of, that's why we want to always confirm with the 4 hour and the daily chart as well. We want to see what what's the candle all about, whether the current candle is bearish, bullish, or whether or not we can see what's going on the left. The most important thing is to look at what's going on the left. Let's say we go into the 4 hour chart and we go like this, and let's just pay a bit of attention into the current price. You can see the current price is at 113.08. Okay, now if the price were to actually go up, yeah, price were to go up, right, it will meet the closest psychological number. As it goes down as well, there is a closer psychological number as well. So 113, as it goes up, the closest psychological number that it will actually meet is the 113.20 psychological level. Okay, so I can just put it here and make a line at 113.20. Okay, oops. 113.20. So I have got here one level up here, which is a psychological level. We'll do another class specifically for psychological numbers only. And as it goes down, it will find support at the 113.00 area. Okay, so now I have the two lines here. Okay, so what I'm waiting at the moment for CHF JPY is a breakout from these two lines. If it breaks out above 113.20 and it goes up, that actually means that it will break out to the upside. Okay, most probably. But if it does break out to the upside, there will be a lot of resistance that it will find as well. So let me also draw the line here. Now I like to draw here because here it's got a lot of body of the candles here, and also the wick of the candle, the highest one I can find is there. Okay, so when I draw these two lines that I have drawn is based on psychological levels. Okay, so now the current price for CHF JPY is trapped between these two lines. Okay, if it breaks out above this 113.20, that means you can buy but actually quite limited, because it might find resistance here. So your trading area is only here at the moment. So let me do it in a box. Okay, so your trading area is only here. Okay, so because it came down here, most likely it will go up here, but then find a resistance here and come down again, and then maybe go up again, come down. So you might actually find some sideway market here. If the price start going into the blue box area, it might actually find a lot of possibility of sideway trending. Okay, so that is basically one of the scenario that can actually happen, because at the moment, if I look at 4 hour and then I go into the daily chart, it is not clear with the trend at the moment for CHF JPY. But the way I look at it is, you may be able to trade in between here, up and down. Okay, buying and then resist, come down again, and then sell, go up, go down. We don't know how long, but then more like what has gone on here. Okay, so here alone, if you are actually trading from here to here, that is about 40 pips. Okay, so you can actually look into trading on a sideway. I'm not a sideway type trader. I like trading it when there is a trend. So here, for example, if it does break out from this area as well, it looks like it's quite limited. You know why? Because if it does actually break out, let's say you got a strong uptrend here, right? And then it goes up again. A lot of traders will feel very excited and think that, oh, now is a time for it to break out and buy. But then if you look left, you have resistance again at this area with all the bodies here. Okay, and then maybe I choose this, the 2 weeks here as well. And then you get another resistance area. So your trading area at the time could also be here, another blue box trading area. Okay, so if the price does pick up for CHF JPY and it goes from here to here, and then it goes up even more, that means it can go up from here to here, but then it starts to resist. That is why we want to actually trade in stages, like how I have drawn all these in stages, because it's the safest way for you to trade and not get overexcited, especially when there is not much going on in the market at the moment. At this moment of time, it's not very clear the trend. Why? Because I cannot see from the 1 hour to the 4 hour and the daily, the same thing. I cannot see the candles going up above all the three lines. All the three lines are very nice above, pointing the sky. I cannot see all that. Okay, so the trend is not very clear, but there is still trading opportunities. Maybe once you see price goes into this box, this is a trading box, this is also another trading box. Now what if price starts to jump down more? If it does actually sort of prefer to go down more, then you also have support here, right? That is the most obvious one. So again, you draw the support kind of zone here, all right, based on this one here, and then maybe the wick. You can choose this wick if you want, or any or this wick here as well. So I would choose that one there. There's no right or wrong, but I just want to look at my trading area. So then my next trading area, if the price does actually fall, is only between here, oops, sorry, and here, another area right there. Okay, so here you want to look at the last moves. Like for example, in this box, what was the last move? It was an up move, correct? So we are waiting for a down move to enter into this. Now in this box, what was the last move? It was a last move from the top here to come down, correct? So we are waiting for an upward move buy opportunity here. Now here, what was the last move? The last move was a sell. So the next opportunity for you is a buy. So let me actually write down for you. This is what we can actually do. One of the techniques to actually trade on a pending order as well is to actually plan and look at the possibility of your trading opportunity. Okay, so I will write it down. Give me a second. So here the last move was up. So if it comes into the box again, your next move is a sell opportunity. Okay, but you are not, you are selling from the top here. As the price drops, then only you sell and then you take profit around this area. So this is a sell opportunity in this box. In this box is a buy opportunity. Why? Because the last drop, the last move was a downtrend. From there to here, downtrend. So your next move is an uptrend. So this is a buy opportunity right here. Okay, this is a buy opportunity, BUY. Okay, but it's not clear or strong trend as yet, but let's look at whether or not all these are real or not. But you are waiting for the price to go into the box. Okay, then it will kick that that opportunity for you. Okay, so when the price does actually fall and come inside the box, beginning to come into this blue line, then you sell. Then your take profit is this next blue line here. Okay, now the same for this one. This one, it needs to go up because the next move is an up move here because the last move was down. Now what about this box here? What was the last move? The last move was a drop in price. From there it came down and dropped here. So then your next opportunity will be for the buy. It goes opposite. What was the last move, and then the opposite move will most likely be the opportunity. Okay, maybe the price wouldn't actually even reach there, but then we want to follow the trend. Okay, so this is a buy opportunity. There you go. So you do have opportunities, but you are waiting for the time for CHF JPY. So what happens if, for example, price falls from here and it comes down? The most recent one you can see is that there is a potential of support at this area here because there's so many candles at this area right here. Okay, and you can sell from there. Comes down. Why sell in this area? Because previously it was an upward move. So whatever goes up here, then the next one is a down here usually. Okay, so this here is your area. Okay, there you go. So your next opportunity is a sell here in the blue area as well. Okay, there you go. So we just wait for what happens and we make these boxes like traps. Whatever goes in, we follow, we do the direction of the opposite of the last trend, okay? The last trend of the box, okay? So give me a second. I hope that makes sense to you guys. So because it was a buy previously here, so now it's a sell opportunity, okay? There you go. Okay, so hopefully it's clear for you guys. You guys are okay. That's your opportunity for CHF JPY on a 4-hour chart. Each box, like the top one here, it's about 40 pips. Second one here is it's also close to 40 pips, about 39, 38 pips. This one down here has got roughly about 32 to 35 pips right there, and this one's slightly bigger, I would think. It's about 50 plus pips, 54, 55 pips. So there you go. But then it is not giving me clarity of trend. It all depends on the ABCD. Now here, for example, we've got an A here, B here, C. Sorry, ABCD going down, ABCD going up, ABCD going down again, but now it's going upwards again. So most likely you have got this box here may trigger right here for the CHF. So combining two safe havens as well is not really a very good idea, but I'm just demonstrating it. You know why? Because if you have a crisis going on, they most likely they will buy the CHF and also buy the JPY. So if it is uptrend for the CHF and uptrend for the JPY, and you combine the two, it may not actually be the best way to combine the pairs, combine the currencies to make up a pair. The best way is to look at the weak and the strong, or the strong and the weak. So one opposite another, then you combine that together. Okay, all right. Okay, so this is basically one of the techniques that I basically follow the market and then share with you guys. So we will do this every time we meet, to present you trade ideas, and basically trade ideas based on certain techniques that are applicable into the current market condition. Okay, so a lot of people, maybe they say, okay, I trade Elliott wave, and I only stick to Elliott wave. You can do that as well, but I find it very limiting, because certain techniques, certain methodologies or strategies or techniques, they can actually fit certain type of market. But I want to share that with you as we go on, because there's just a lot of techniques and strategies. I have my own geometric pattern, but I use my geometric pattern onto everything that I see. So it's just that the trend is not clear, so I don't draw the geometric pattern in a very unclear trend situation. Okay, so this is for CHF JPY. Let's take a look at at gold, and let's see what kind of technique can we actually apply onto gold. Okay, so onto gold, we have got gold trading at 1705. Okay, on the 4-hour chart, we looked at the 4-hour chart. Now we want to just start from 1 hour. Now with the 1 hour, we are looking at price falling at this moment of time. As I look left, it has gone under this support area of a single bullish candle here, which actually means that it may actually go down much more. As I look left again, I see that the price could actually follow this very bearish candle. As you can see, a single bearish candle. You want to look at support levels, and you want to look at these are support levels here. This support level here, you got some more support right here. You also have support right here. Okay, so as price comes down, it could actually follow on a 1-hour chart this length of this bearish candle. But I just want to take a look at the higher time frame as well, just to make sure that I'm seeing the same thing. Now, if I go into the 4-hour chart, I still see that the current price is trading on top of that single bearish candle in the past. Okay, now I like to look to the left, but don't look left too fast, too soon, and too far away. Okay, you just want to look at the left first. If I look at the left, I can see that it's got a bit of support here as well before, with a single bullish candle support. Now if I draw a line on the body there, I can see that it's the same area right here, has also some resistance turn into support and all that. But most importantly is that this current candle right here has got stuck at exactly where the bullishness has actually happened. So with the goal, if it does actually fall, I see that it may actually mirror this movement of this bearish candle. Okay, look at this bearish candle here. That actually means that the current price is at bearish territory, because in the past, people like to have sold there. They sold there. And then if you look at further to the left, they sold here as well with a single bearish candle here. Okay, there's a lot of bearishness has actually happened from this current price right here. Okay, so if it were to actually fall further, I think it may mirror and fall at the end of this candle, or you see the end of this candle is similar to the end of that candle right there, and they are both bearish candles. So that actually means that there is a potential for prices to fall further from the what do you call that, 1705 area to the 1686 area for it to fall. Okay, now the other thing as well is that it doesn't look like the trend is very clear, but it also looks like there's a lot of support as well in between right here. If I draw the support of this line, then I see a lot of support as well everywhere. You see support directly here. So that actually means that it may fall. It can actually get supported here as well. It's a potential. But if it does actually fall further from the second line I've drawn, then there is more potential for it to drop all the way down to the 1686 area. So in other words, it looks like it's favoring a downward trend for gold, not yet an upward trend, even though it's a risk off environment. Maybe they are preferring to actually buy JPY or CHF, but gold, it is still there. But again, you never know until we see what goes on first. It has to go under. Okay. So the other thing as well is, if I go onto the daily chart right there, I can see that on a daily chart, on the long term, because candles are still above all these three lines, and the three lines is pointing upwards towards the sky very nicely. So that means the longer term daily chart and above, even the weekly, still will look into gold going up, but it is still very, very long way to go to actually really buy gold properly. As you can see, the market, you want to buy and then it goes up, it gives you confidence a little bit and it comes down again. It has actually happened for the last 6 8, maybe a year of gold trading, because a lot of people out there commercially, they are telling people that because of the crisis, gold is your best buy and things like that. But we need to remember that the central banks of a lot of world central banks and all that, they are still buying gold. So because the bigger boys wants to buy more gold and put it in their central bank and all that as assets, of course they want to keep the price low for them to buy. Hence the reason you cannot see gold's prices really going up and really ride the trend going up. It goes up a bit, comes down a bit, but then still overall, it is giving you a lot of ABCD in the long term for it to actually go up. Okay, so we had, for example, you had one A to B here, and then C to D there. So right here was the target, and then it went up again. Then you've got another A to B here, and then C came down here, then you went up here. Now it's exactly there. Okay, I'll find the resistance right there as well. So there's just a lot of ABCD pattern going upwards. A lot of people have actually gained on the buying side of it, but for now it looks like it may actually go down further with loads of resistance as well at this area up here. You see, so you've got all these resistant areas as well. So you find that all this resistant area here is causing price to go up down in a range. At the moment, gold is trading on a daily chart in a range. You see the range right here. So it needs to actually break out from the area and come down. Okay, so we need to really look at what happens after it breaks out, whether or not it has been supported by bearish candle from the yellow area. There is one bearish single bearish mother candle, we call it, but it came down and it found support exactly there. Okay, and exactly there, this is resistance here. Exactly there, you have got a lot of price playing at that line. So it maybe that is where the support is as well for gold. So at this moment of time, I don't really have much confidence on gold buying at this moment, because it's just showing me possibility of downward more than upward trend. So no, I'm not buying it. I think I prefer to sell the gold as opposed to buy, at least for now. It's just for us to get a better picture of what's going on as well. So try to look at gold and limit your take profit if you are selling as well to this area of 1687. But in terms of buying as well, is quite limited at this moment. I didn't see any very strong bullish mother candle that is very long and strong, but there is one here and there's one here, and they're in the same length as well. So if at all you have got a buying opportunity, just don't get overly excited with gold. If for example you got price coming up, let's say it didn't go down, now it found support, it goes up, yes, you can leave it for a bit until 1716, but don't let it go beyond that, because it might find resistance at 1716. Okay, but if you are selling, for example, a seller, maybe you've got more opportunity and more pips opportunity, especially if it start to come into this area and then burst out from here, then you might get it at 1687 right there. Okay, I hope that is clear. You guys have got any questions? Let's go into question and answer before we end the today's session. I hope it has been useful for you, and let us keep looking for opportunities and then giving you trade ideas as well. Starting from tomorrow onwards, I will be posting much more onto trading dot as well, because market is a little bit slow at this moment of time. It's probably better tomorrow onwards. We have got loads of data, a lot of economic data that will actually move the market, and it will be easier for me and clearer for me to actually spot opportunities as well, and draw and share the screen with you and share the screenshot with you on where I am buying and selling and taking profit, as well as my stop loss levels. Okay, questions, guys, before we end today's session. So far, are you guys okay? Euro USD, it has got some bullishness going on at this moment of time. No questions, guys? You guys are very quiet. No questions? More questions, more you would learn, and more we would actually be doing. Digesting. Ah, that's good. You mean food, or you mean the chart? Are you guys eating? Not digesting food. It's okay. Chart, yes, okay. Good. So yes, that's good. But I understand for Noshini especially. I mean, we take it step by step. So don't worry. I'm throwing you guys at the deep end, but we can always go back a few steps, and then we rewind and revise, and then we go forward again. Okay, so don't worry. Right? We'll take back a few steps back, a few steps up, and then we will be able to cover what has been not very clear as well. All right. No questions. The others. Any questions at all? Okay. Ashwath, are you clear at this moment? I mean, for certain areas, yeah. Very good. Okay, perfect. Yes, I think from tomorrow onwards, you will see I've got more links to send you guys from Trading Dot, analysis that I will post, looking at lots of trade setup, but they have not settled as yet. They are not very clear, mainly because of the three lines as well. For Noshini, especially if you are looking at what I do and you're not sure how do I apply the chart, the lines and all that, you can always experiment and ask me as well. You can direct message me too. So you guys, any one of you guys could actually do the same. Any questions, ask me directly as well on Telegram, especially, would be great. If you guys want to share your questions with the rest of the group as well, you can. It's entirely up to you. Okay, good. Very good. Okay. So yeah, I think that's it for now. I want you guys to also look at the CHF JPY for what I have drawn as well. All these boxes. We want to look at whether or not the direction is exactly as I say. Was it a buy opportunity here? Let's wait until tomorrow, and then if I see any changes and it does go up here and there's a take profit there, I will let you know, or come down here and take profit here for the sell, I'll let you know as well. But as you guys follow and look at how I trade and how I set things up, you will get the idea better and start to be able to do it yourself as well, and then we keep polishing your skills. Okay, so this is basically how I simplify the trading map of what to buy, what to sell. So for me, I could easily, because the market is quite unpredictable for the CHF JPY, meaning not very clear in terms of trend, but there is a possibility of it going zigzag sideways. So hence the reason I'll just wait for the fish to swim into which box. And I could also maybe do pending order in all of these, and then wait and see which one gets triggered and which one gives me profit. So it's like setting the traps there and wait for the fishes to swim into which trap, and then you are able to then see that. So you guys monitor it as well on CHF JPY, see how it goes, look at how the candles are reacting, and then we can talk about it as well. Why did I draw the two lines here? Maybe some of you guys didn't catch that quite quite a bit, but then sometimes it needs a lot of practice. Okay, it needs a lot of practice to be able to understand support and resistance lines. The support and resistance lines is a form of price action, and price action is one of the most powerful technique. It does look simple, but it requires a lot of practice, mainly because you need to be very close to the market. You need to see it a lot, and you need to practice by doing a lot, and then you will get it. Definitely, you will start to understand it much better and apply it. Okay, so why did I look into mother candles and the power of a single bullish or bearish body? You know, why did I look to the left? And all that things that I've showed today, for example, will enable you to trade almost every time, meaning that you are able to place at least a pending order or plan to buy and sell, and then hit your TP, most probably, I hope, more than your stop losses. But of course, anything that I've given you here, I would always prefer a 1-to-1 risk reward ratio, which actually means that if the potential here is 50 pips, then the stop loss is also 50 pips. If the potential is 30 pips, then the stop loss is also 30 pips. So I usually use that ratio as the simplest, safest way to actually just measure my way of trading, okay, or the risk in my way of trading. So there you go. So if I were to see, we've done all these based on only some candles to the left, okay? All these yellow lines, for example, yeah? So if, for example, I go to the daily chart, I zoom out, for example, maybe I don't zoom out. If I look to the left, you see how it respects all these lines as well automatically. I never been to the back, but you can see how, why did it just go there, get stuck, come down here, get stuck, and then go up there, get stuck, come down, found resistance, come down. We didn't go so far back. We didn't even go to the daily chart. It was based on the 4-hour chart. So this is the power of price action. How did it just go and connect there, here, for example, here, for example, and here, right in the dot. So all these are support resistance zones, all these two yellow lines here, and all that, okay? So I'm also curious to see how price will be trading or respecting all the lines or not, or enter the boxes or not. Somehow it will enter the boxes, okay? But what I would like you to see and monitor and help me monitor is to look at whether or not it entered this box and given us a buy opportunity. If it entered this box, given us a buy opportunity. This is what I want you to look at. So why is it a buy opportunity, not a sell opportunity in this box? This box has a sell opportunity because it was a buy before. So usually what happens is that, look at this middle line right here. If there was a, if from this area to this area was an up move, then there is a down, and then there is a zigzag up, and then down will be the next one, and then up, and then down again, and then now it went up. So most probably it's waiting for a downward move. So I have monitored the market to be exactly like this all the time for the past 12 over years, moving like that, up and down, up and down. But if you know how to find it, the area, the zone, that is why it's a little bit like property hunting. They call it location, location, location. So the location of these are very, very powerful price action. So what I want to do is to give you all these webinars, from time to time, and as often and as frequent as possible, so that you keep seeing what I see and how I trade. You will get the habit of it. You will probably adopt that style and understand the price action from my perspective as well, and that will usually help you to be able to trade much, much better and get consistency. So let's monitor the CHF as well as a sample, and then tomorrow onwards we have got live trade ideas for you guys, whereby I will give you guys some entries and exits and stop losses, and you just try and see what happens with these trades. Okay, of course, we will try to I'll try to analyze it best I can with higher probability on the winning side and lower probability on the losing side. We will still lose probably, but we will have losing trades. I mean, I would like losing trades. I want to give back to the market as well, of course, but this is trading. Trading, you can never get 100%. Even if I do get 100%, sometimes like out of 10, I get all 10 hit my TPs. I don't feel very happy because I know that it's not going to last. These hitting your take profit not going to last for very long. Because it's just part of trading. Probability is the game. Volatility is the lifeblood of trading forex. So you will always have the ups and downs. But the most important thing is your techniques and trading strategies have to be 65% accuracy and above. Only then you can really make money. Okay, so that is basically it. I'm going to be sharing with you on techniques and strategies that have 65 to 70% accuracy level. And we want to work on that and see you guys make money consistently. Okay, guys, so we will plan the next ones perhaps the day after tomorrow. Um, Next webinar, next learning session, and then we'll take it. But before I go, I just want to be reminded as well on reminding you or telling you about an offer that Errante has. Errante has got two bonus offers. Okay, very simple. The first bonus offer, if you open an account with Errante, is a non-deposit bonus. That means you don't need to for the first timers only, you don't need to actually deposit anything. You will get $35, but then to withdraw that $35, you need to trade at least 5 trades. Then you can withdraw the profit. So that actually means open an account, go on to whether it's Pratap or Subu. You guys can send the link to the traders who wants to open an account with Errante. And once you open it, you will get $35 to use to trade. Okay, you don't need to put money in yet. If you want to, then you've got a second bonus. Okay, so for those who just want to test it out, you will just open an account and then register and open an account, and then you will get your $35 non-deposit bonus. For those who wants to trade, make money real and all that, and they deposit the money, Errante will give you a deposit bonus as well, which basically means Errante will match whatever you deposit as real money, and up to $500. So if you've got $500, Errante will give you an additional $500. Okay. And if you've got $800, it will put 500 as well. If you've got 1,500 as well, because 500 is a max. But then it's not a withdrawable money, but it's a tradable money, meaning that you cannot just put in the money and then Errante gives you the 500 and then you just withdraw all that. No, we can't. But you can trade with it, so you've got more capital to trade. You can open more trades, more lot size, higher lot sizes as well. But whatever you win or profited, you can withdraw it with the money that you have used from Errante as well. Okay, so that's a very good offer because to get to a far destination, you need petrol. And in the case of trading, the petrol is the capital. So the more capital you have, the more you can actually travel very far in reaching your profit targets, and the more trades you can open. The more trades you can open, the high with a good strategy and higher probability technique, you are able to actually make good money steadily in forex trading. Okay, so that's basically the way to go forward. All right, guys, I think that's all the time I have for you, and we will see you again most probably day after tomorrow. I'll organize another webinar. So I want to see how the market, or if you guys prefer tomorrow, I think we can do one tomorrow as well. No problems. Okay, so it's entirely up to you guys. If you guys are free tomorrow, same time, we can have another session tomorrow. Okay, all right. There we go, guys. I need to head off to fetch my daughter. So we will see you guys again. If you guys are interested tomorrow, just let me know and I'll send you guys a link tomorrow itself and we will have a webinar. Okay, perfect. All right, let me know. And if you guys are okay tomorrow, we'll see how many of you guys want to tomorrow. And easily done. I'll give you a link, and we can take it from there. No problem. Anna, most welcome. Ashworth, most welcome. You guys, Pratap, everybody, most welcome. And yeah, let's see what happens with the market. And it's a good month, by the way, to look into trading. And we probably will trade a lot with many opportunities because of a lot of risk events. A lot of things are happening in the market. And now we've got the coronavirus thing as well, and various things. It's mixing up a lot of emotions, in the market. We call it sentiments, whether it's fear, greed, or uncertainty. What happens is that it brings about volatility. So when you've got a lot of volatility and a lot of risk events, data releases, economic releases, you've got the coronavirus, latest news as well. All these mix up are actually giving a lot of volatility into the market. With the volatility in the market, you are getting opportunities. Of course, you're getting risk as well, but then we want to measure our risk. Hence the reason we need a very good technique and approach to trading the forex market. Okay. Most welcome, everybody. Thank you very much for your time as well. Have a good night and a good, profitable, productive day as well tomorrow. Take care. Have a good night. Bye bye.